have a lot of sympathy for investors coming into those halls and seeing those hundreds of companies with hundreds of projects and being able to sift through them and come up with the projects that are, to use Eric's word, viable. And it's tough. Even, you know, I've been in the business for a long time, and I have a hard time segregating the sheep from the goats. Well, one way to do that, turning to Sunridge, is that in this terrible market that we've been experiencing for the last couple of years, which companies have been actually able to raise money? And I'm happy to say that Sunridge has been one of them. We raised $10.8 million in November of 2012. We raised another $6.5 million in October last year. So, you know, at least the professionals out there are validating Sunridge's Asmara project as being viable, and Sunridge to be not only a survivor, but I think thriving, likely to thrive in the next year or two. Anyway, I'll tell you about our project very briefly. I only have a few minutes here. Unless I forget, like Eric pointed out, we have a booth outside here, so I'm going to make this pretty brief, but I'm here with Greg Davis, and we're happy to talk to anybody and answer questions afterwards. Sunridge, first of all, is a junior Canadian resource company listed on the TSX Ventures Exchange. We've been in the country of Eritrea in Northeast Africa exploring for the last 10 years. Here we are, and we're on the northeast coast of Africa on the Red Sea. Eritrea, it used to be part of Ethiopia. It's a country that not many people know much about. It's been an independent country for the last 20 years. Our projects are all around the capital city of Asmara in the Central Highlands here. To note, the Bisha project, Nevsun Resources, are here as well, and their project here has been hugely successful over the last few years. So, and there's another gold project here, Zara, being in construction at the moment. So we think that Eritrea is an emerging mining country that will show to be very successful mining projects like the Bisha project over the next few years, including Sunridge. This is what our projects look like. The green is our land position. This is the capital city of Asmara. It's about 50 kilometers from top to bottom of this map, to give you some idea of scale. This is the capital city, about 500,000 people. We have 6 deposits that we've discovered in the last 10 years, listed here, and this is the land position that holds these deposits. 4 of them, we completed a full bankable feasibility study on. Again, this is, you know, the ability to raise money translates into being active. We not only have money, but we've been very active the last couple of years. Completed first a pre-feasibility study, and more recently a full feasibility study on these 4 deposits here. 3 of them here and down in the south. These 2 other projects here, Adi, Rassi, and Corrado, are exploration projects. We haven't done much exploration in the last few years, but that is going to change in April. This is what Asmara looks like. It's a beautiful place. We enjoy working there very much. This is an old colonial Italian city with old colonial architecture. Kind of looks like Hollywood here, but though it's not really quite that way. It's a glamorous photograph. But Asmara is considered to be one of the most beautiful and safest capital cities in Africa, and I can certainly attest to that. The population of the country as a whole is about 4 million. The mining code is based on the Northern Territory of Australia, so something that we all understand. Everybody that we deal with speaks English, so it's very easy that way. Excellent infrastructure. We have full paved roads on all our projects and grid power. And the most important thing is that the port of Massawa, which is where Nevsun are currently shipping copper concentrates from, is only 120 kilometers on paved road from our project. So very good infrastructure. And the fact that Nevsun has been in production successfully for the last 3 years is hugely important to us as well. The feasibility study that we completed in May last year showed some very strong economics, $692 million in net present value. Because of the difficulty in recent years of small companies raising lots of capital, we have chosen to do this in a 3-staged program, which I'll get into a little bit more in a minute. So the stage 1 that'll partly pay for stage 2, and stage 2 that'll partly pay for stage 3 to minimize the amount of capital needed for the project. Phase 1 will start with direct shipping ore. We have 16% copper ore very close to the surface in one of the projects, Debawa. And this we plan to mine by open pit methods, crush it, bag it, and ship it and sell it to the smelter. Very little capital cost, and that can be brought in production for less than $50 million, $50 million. This is the production over the first 8 years of full production, so significant amount, 65 million pounds of copper per year, 184 million pounds of zinc per year, plus precious metals. One very important point is the government of Eritrea has given the project full support in terms of purchasing their maximum interest, so that they have a 40% interest. They're paying for that interest. We did a news release just about a month ago talking about what they had agreed to pay. And, you know, one of the perhaps surprising things is that the government has held to their agreements with all the companies so far. And we really trust the government. We really like working in Eritrea. There is no petty theft. There is no underhandedness. It's a very straightforward place to operate. So we like being there a lot. The important thing about Anamco, quickly, is that they are now responsible for 1/3 of all project costs. So we're planning an exploration program to start in April, for instance. They'll be on the hook for 1/3 of all those costs on a monthly basis moving forward. And that translates into all the project costs on an ongoing basis, bringing it into production. This is a summary of the contained metals in the project. Embadero is our big new discovery. We discovered it in 2006. It contains almost 1 billion pounds of copper, just shy of 1 billion pounds, and about twice as much, 2 billion pounds of zinc. So this is a very large deposit, and the rest of the deposits are essentially satellite deposits from Embadero. The idea is that this would be the center of operations, and these would be satellite deposits from which the ore is trucked to the central operation. This is the results of the feasibility study. I'm not going to dwell on this slide because this is somewhat repetitious of what we've said before, but to make the point that it's very strong economics. The peak capital funding is about $350 million, much less than it was in the pre-feasibility study because of the stage program I mentioned before, 15-year mine life. This goes into the details of this phased production. Less than $50 million here for phase 1, which is this direct shipping copper ore and the gold production. Again, this pays for partly phase 2 of the high-grade over 2% copper production at 2 million tons a year, which partly pays for phase 3, which is 4 million tons a year, full operation, which is good for 13 years. This is a quick summary of timelines. You can see here we've achieved these very significant milestones over the last few years. Most recent one is completing negotiations with Anamco, the state mining company. These are the timelines we want to do for this coming year. We feel we're following in the footsteps of Nevsun, where they were in about 2008. These various milestones for the rest of this year, including exploration that's not on this slide. We will start in April. Quick share structure. We have 210 million shares out. This is a summary of, and our market cap is around $60 million only, which is a small percentage of the value of the project, I should point out. Just quickly, the outlook for 2014. We expect to get the mining licenses in late 2014. They have been applied for. The Eritrean mining company is paying us $18.33 million over the next few months for their interest in the project, on top of which there's about $4 million of expenses that they owe us that will be paid in the next couple of months. Project financing is well advanced and will continue. Engineering, we'll get into detailed engineering later on this year. Exploration activities I've mentioned. And the last point here, just to say, is that now that we've finished our feasibility study, now that we've completed our negotiations with Anamco, yes, we have a lot of interest from other companies wanting to buy the project by the company. And this has suddenly increased now that we have done the feasibility study and completed negotiations with Aramco. So we have two paths ahead of us, either continuing to bring the project into production ourselves, but looking for potential offers to buy the project. And we'll continue on that path. Thank you. We have a booth outside. Please come and talk to us.